The Reserve Bank faces a decision. Do they cut the official cash rate and risk looking reactive, or hold the line and risk strangling what's left of the recovery? Growth is crawling, unemployment is creeping higher, and yet the tone remains hawkish, measured, restrained. While the US and Australia move swiftly to stimulate, New Zealand hesitates. Is this conservative caution or strategic complacency? The popular Mike Taylor, founder of Pi Funds, is here to unpack whether the RBNZ is letting the recession drag on longer than it needs to, and what that means for investors, homeowners, and the country's economic credibility.
Financial freedom faster. Financial freedom faster.
While you're watching, check out Mortgage HQ's latest release of the Mortgage Snapshot, a calculator for figuring out your options. See the description below. Mike, are the RBNZ being negative Nellies or doing the best with what they've got?
Well, you know that I've been calling for interest rates to be lower for a long time. Obviously, that had, these higher rates have started to have quite a significant impact on the economy. We're in recession, unemployment rate is rising. Latest figures for the housing market, as you know, we're well off the January 2022 highs. I think, is it like 19%? That's just nominal terms. The economy needs a shot in the arm. We need interest rates much lower. I don't want to sound like Donald Trump, kind of like jawbone the rates lower, but genuinely, our economy is not strong, and I think it would be significantly beneficial if rates would be cut.
What are other international economies and how are their reserve banks reacting at the moment?
Well, most other international economies have been easing rates. It's only been the Fed that's kind of really been on hold for a while of late. But, look at the difference between New Zealand and the US. Despite everything that's going on, the American economy is still strong. And those US corporates are still producing record profits, and the earnings per share in the stock market is performing well. So down here, the NZX is lackluster. A number of our largest companies haven't performed well this year. So, inflation's within the target band. So I don't understand.
And if the RBNZ is discussing holding things as they are, what trade-offs are they discussing really to give the economy a shot in the arm? What are they potentially giving up?
Well, I guess you have to consider that, Hawkesby's probably interviewing for the job on a permanent basis. So there's that to consider. And maybe he just wants to play things down the middle and not be too hawkish or too dovish. We don't know who the new Reserve Bank governor will be. And they may take a different view. So most of the local economists have come out and said that they don't really expect a cut, but they think that they should cut.
And if we look at what's going on in the S&P and global equities, we had Liberation Day and the market crashed and then crashed a bit more. And now we're back to above where we were before that.
Yeah, it's a bit baffling, to be honest. There a lot of people came in to buy the dip when Trump did his tariff pause 3 months ago, and the market has, as they say, climbed the wall of worry. The US hasn't fallen off a cliff, and many of the economies or the major trading partners seem to be making deals which are favorable, I guess, to the US.
And if we look at strategies for investing, I've seen you've been recently posting, you're a good LinkedIn follow, about buy and hold and about picking, buy and hold as a strategy, the coffee can approach, so to speak.
Yeah.
How do you go about picking winners where you would expect volatility, certainly over a longer period, that you can comfortably put them away and not worry about it?
Yeah, I think I posted about Microsoft, which if you bought that, like 30 odd years ago, you make it for 1,000 times your money, despite the fact that we had many bear markets in between and lots of volatility. Of course, nobody knows what's going to be a great business in 30 years from now. But it just kind of goes to show that you shouldn't get sort of shaken out of the market during periods of volatility. If you're invested, you use those periods of volatility to add to your investment.
And what, the US dollar is really struggling in terms of volatility at the moment. Seems that a lot of central banks are looking at other options.
Yes, yeah. Yeah, I mean, central bank buying of gold has gone up significantly, particularly the Chinese, in the last sort of 1 to 2 years. And that's why the gold price remains particularly strong at the moment.
And what do those wearing tinfoil hats have to say about all of that?
Yeah, I mean, I guess what are the alternatives? There's not a lot really. I mean, Bitcoin is not large, or crypto is not really large enough for central banks to park money in yet. So the really only alternative is to buy other currencies, or they buy gold.
And you mentioned the NZX governance issues, and it's been flat. Recent report from Forsyth Barr goes into detail. I'd love to hear your thoughts on how you feel New Zealand companies are being governed and managed, and what they need to do to perform at a higher rate.
Yeah, I guess when I look at some of the businesses that have been in decline over recent times, some of them, for example, everyone's familiar with Ryman. I mean, generally Ryman's a good business. It's got a good product, but they expanded into Australia and they took on a lot of debt when rates went up. I guess they got caught out by that, and they've had to raise money at lower prices. And other examples, which I've posted about before, is like the Warehouse. The Warehouse has had a dominant position in New Zealand retail for a long time, but they haven't really been able to capitalize on that in the last 10 years, whether it's through their online or they sort of went a little bit into grocery, but didn't really. And if you think about the Costco model, I still believe that that's the way Warehouse should go. Who knows? I'm not at the board table. Maybe they've explored that already. But yeah, it just feels like in some instances, different decisions will produce better outcomes.
Yeah, and is a part of the problem that when companies list on the NZX, it's more of an exit for the major shareholders rather than an investment play?
Yeah, it's not necessarily a growth play, exactly. It would be great to see companies come into the NZX to raise 50, 100, 200 million to help them grow. These days, most New Zealand private businesses stay private, and they end up being backed by either local venture capital or offshore venture capital, invested in some of those businesses. And one at the moment, it's got a valuation of 1.6 billion, but all that funding's just basically coming from the US.
Yeah.
Yeah.
If we look at the big elephant in the room for New Zealand is probably our issue with not having enough in retirement savings.
Yeah.
And we look across the ditch, and envy's usually not something that you want to talk about too much, but Australia's got it pretty good. Like, how are we gonna fix this pending iceberg that is just gonna smash us in the face in the not too distant future?
Yeah, it's a reasonably easy solution, I think, is that, first of all, contributions, you need to make KiwiSaver compulsory, for one thing. And then you need to lift the contributions from the current 3+3 to at least 10. And you can do that slowly over time. And then a third point I make is that there are a lot of people who collect superannuation. And to me, I figure like superannuation is a benefit. It's the same. It's no different to a sickness benefit or a dole. So if you don't need it, don't take it. But of course, it's free money, so people will always take free money. So then you need to means test it. So let's just say you're 66 or 67, you're still working, you've got a really good job, and you're earning a couple $100,000 a year. You still get this national super, and that's wrong. Yeah. You don't need it. So we need to means test it for people who've got high incomes.
Yeah, I mean, Australia, referring to your post, compounding their super at 5%. What is it? Let's get this right. GDP. 5% GDP. New Zealand's at 1% of our GDP. Like, we are falling further and further behind Australia And Australia is growing at the rate that we really should be if we can sort it out quickly.
Yeah, it's sometimes, you just have to do the hard thing and force yourself to save for a future benefit.
If we look at how far behind we are in terms of tax collected based on the obligations that are coming, do we need to look at other countries that are looking at tax differently and maybe adopt some of what they've done? And it might be unpopular with those that are more on the right politically, introducing wealth tax or capital gains tax or inheritance taxes. But the money's going to get taken off us eventually, either by the left or the right. Is it about time that those on the right politically get pragmatic and start implementing these types of taxes?
Yeah, what's the challenge is that we don't want the sort of super rich, ultra rich to leave New Zealand, and of course, then there'll be no tax revenue or anything from them. So it's a bit of a balance. If you look at countries like Switzerland, which have, or Singapore, they do have low taxes. Yet, I know in the case of the Swiss, and they still manage to provide a lot of services. But part of that reason is they've attracted money in there that wouldn't otherwise be there. So New Zealand's is a nice place to live, and people may want to come and park money down here. So potentially there's an opportunity to offer a different tax system for foreign corporations so that they could come down here and maybe pay 15% tax just to get money in that we wouldn't otherwise have.
Yeah, and considering that you're definitely in the 1%, Mike, and a lot of our clients are, what would be the impact if we did look at something like a wealth tax? You got to disclose. I believe in Switzerland it's a 1% wealth tax. Do we need to get aggressive with taxing on disclosed assets, net assets, so that the money? No, we need to do something drastic soon. Otherwise, something drastic's going to happen that we don't like.
Yeah, exactly. I don't know if that's the answer, but someone needs to look at it and make the hard decisions on super, on tax, whatever, to set this country up for 25 to 30 years and build the infrastructure that we need.
And have you got strong opinions on how that infrastructure should be, the budget and the planning should be set up? Because it looks like based on council spending, they're spending the money on salaries, as you've alluded to recently, instead of spending money on infrastructure and kind of long term. How should New Zealand think about infrastructure funding and planning?
Well, I would say that any form of transportation infrastructure should be funded privately and then tolled. So similar to what they do in Australia for roading and rail, etc. And then other healthcare should be government funded. So slight difference in the two way you would treat those. But I think there's a good solution.
Yeah. Well, I appreciate your insights today, Mike, and you're a good follow on LinkedIn, posting constantly, and you want to follow along with the funds and the reports from Mike Taylor. Appreciate your insights today.
Thanks for being on the show.
Just a reminder, your competition has already hit subscribe on the fastest growing property investment channel in New Zealand. They're getting the tips, tricks, and the juicy insights before you've even finished your coffee. They're buying, building, banking profits while you're still sitting there thinking, should I click the button? Come on, be clever, hit subscribe, or don't, and enjoy watching everyone else get rich.